What began as a steady fall towards the end of 2021 has soon transformed into one of the toughest crypto winter the industry has ever seen. Bitcoin is presently at $20,000, less than one-third of its November 2021 all highs. It is a similar tale for Ethereum, which slipped below the 1,000 level. But with significant investment losses, the previous 2 months has also seen 3 of the biggest project failures in the crypto business. It began with the Terra UST catastrophe in May, which drove the market into a fall, and since then, 2 more enterprises, crypto exchange Celsus and venture capital firm Terra UST, has succumbed under market pressure and are inching closer to insolvency. What's up, fellas? In this video, we'll investigate what went wrong with this project and whether there's any hope for a comeback. If you just stumbled on our channel for the first time, I warmly welcome you to Crypto Sage. On this channel, we provide useful updates relating to cryptocurrencies and leveraging technologies to invest in other assets. I hate to break it to you though that we are not financial advisors. If you want financial advice, please consider the help of a financial advisor because this video is for entertainment purposes. So if it sounds interesting, please smash the like button below this video. And so let's get to the truth behind the fall of Luna, Celsus and Terra UST. Terra's Form Lab, the company behind the Terra ecosystem, withdrew $150 million worth of UST from a decentralized exchange known as Terra Pool on May 7, 2022. In order to transfer their finances, Terra Labs made this action. As a result of the large-scale extraction, Terra Pool is now very vulnerable to exploitation due to lack of liquidity. Within 30 minutes following Terra's Form withdrawal, a trader recognized the chance and swapped 85 million worth of UST for USD coin. Secondly, another trader put 100 million worth of UST into 25 UST slots and did the same thing. There was a huge amount of UST in the crypto market as a result of this. In spite of Terra's Lab's best effort, the two traders had already done the damage and the UST had lost its one-to-one peg with the US dollar. This caused widespread panic among Terra's investors. Several investors began exiting their position on UST with the Anchor protocol. If you do not know what the Anchor protocol is, the Anchor protocol is a decentralized finance project run by Terra's Form Lab itself. Anchor guaranteed unusually high payout to USD depositors, which drove them to pack 72% of all UST in existence with the protocol by mid-April. From the total of $18.74 billion US dollars, 12.67 billions are USDTs. Additionally, Terra's native cryptocurrency Luna was used to preserve the UST to USD peg. Because of this, the value of the Luna token dropped along with the UST. By the end of the month, Luna had dropped from $80 to 0.001 USD. Wow! Since then, Terra's co-founder had proposed a number of ways to revive the project. One of them was a hard fork that will result in a new blockchain and new currencies bearing the same name. The old network will be renamed Terra Classic and Luna to Luna Classic. While the new currency had gained some traction, it is not near Luna's peak of $87 in May. So how has this fall affected Terra UST? The Terra meltdown has also had a ripple effect on Terra UST because Terra UST admitted to the Wall Street Journal on June 17, 2022 that the Luna tragedy had resulted in significant losses for the company. When the LFG staged its $1 billion fundraising event in February 2022, Terra UST co-founder Kai Davis informed the Wall Street Journal that the company had $200 million locked up in Luna tokens. The $200 million vanished after the implosion. In a quote to the WSJ, David said, "The Terra Luna situation caught us very much off guard." In addition, the crypto exchange BitMEX claimed that Terra UST owes it $6 million according to the blog. Hedge funds had been forced to liquidate their assets after failing to fulfill margin calls on 3 different exchanges in the previous week. FTX and Deribit have received relatively small injuries, but the BitMEX sum is enormous. By selling off assets and renegotiating its obligations, Terra UST is hoping to raise money and pay off its debt while also seeking for new investors. The WSJ quotes Davis as saying, "We are dedicated to working things out and finding a fair solution for all our people." And finally on this video, let's talk about Celsus network. On 13th of June, the Celsus network, one of the largest crypto lenders globally, announced that it was totally suspending withdrawals, swap, and transfers. As of May 2022, the initiative was managing $12 billion in assets on behalf of 1.7 million customers throughout the world. Investors are still waiting for the procedures to explain how and when their cash will be redeemable. According to CoinDesk in a report, the protocol has overheated due to a series of strategic missteps, not the price drop in UST. Celsus suffered two distinct losses of $22 million due to the Badger DAO hack and 38,000 ETH due to the loss of wallet private keys by stakeholders. Temperatures were slashed by the Celsus network because of extreme market conditions. In a quote, it states, "We appreciate that this news is upsetting, but we feel that the most responsible move we can take to safeguard our community is to halt all withdrawals, swap, and transfers between accounts. All our efforts are dedicated to ensuring that we fulfill our financial obligations to clients by safeguarding and preserving all our assets. We want to stabilize liquidity and restore withdrawals, swap, and transfers across accounts as rapidly as feasible," the news blog stated. Additionally, the protocol has filed an appeal and is looking for methods to emerge unharmed from the crisis. As an alternative, investors may be called in to help with financial restructuring or to provide more capital. Before I end this video, let's talk about some lessons we can learn from the collapse of Terra UST. The collapse of Terra UST highlighted a number of crucial investing measures that should be taken. Since a result of the bull market, a great deal of prudence has been tossed to the wind as everything was repeatedly pumping and everyone was therefore making money. However, when dealing with a volatile market like the cryptocurrency market, risk management, smart preparation, and vigilance cannot be emphasized enough. They aid both small and large investors in making more informed judgment as opposed to acting only on their belief and faith in a business. And that is all for today's video. If you have enjoyed this video, please smash the like button, hit the subscription button, and turn on your notifications so as not to miss out on our future videos.